And you can take the roll and then we'll get started.
Suzanne Souter,
Present?
Chris Cashman,
Present.
Laura Fontana,
Present.
Jonathan Justice,
Present.
Joseph Day.
Here.
Also present, City Administrator Antonina Tantillo, City Treasurer James Wisman, City Finance Coordinator Courtney Taylor, and City Solicitor
Michael.
Michael Holland. I am so sorry.
Well, first I'd like to thank you all for being here and thank you for agreeing to serve on this committee. I know the last thing most of us need is another meeting to attend, but here we are. And I think it's going to be a valuable resource for the council and the city as a whole. So I thought maybe before we got into the meat of it, we'd at least, maybe you all know each other. I don't know, Newcastle's pretty small, but just in case, I thought we'd, brief introduction, your name and what in your background brings you to this committee. And I'll start, Suzanne Souter, I'm president of council. I've been on council since 2019, so I've been through 7 budget cycles. And I have to say that I learn something new every time.
Chris Cashman. I'm the 6th generation of my family to live in Old Newcastle. I've lived here most of my life. I'm a real estate broker, sell a lot of real estate in Old Newcastle. Also manage for Patterson Schwartz, so I deal with budgets, expenses, revenue, all that kind of stuff.
Mike Hoffman, City Solicitor, McConnell Gallagher. Between me and Lisa Hatfield, will be assisting the city going forward.
I'm Antonina Tantillo, I'm the City Administrator. This is my 2nd going on 3rd budget cycle.
Courtney Taylor, Finance Coordinator / City Clerk. I am the one responsible for all the finances for the city office. I don't know what
Going on the 4th probably.
Yeah, if you want 3, I think 4. So yeah, I'm the go-to finance person and all.
Right. Thank you. Jim?
Oh, I'm Jim Wisman. I'm a CPA and a CFP and an accredited estate planner and CLU, those kind of credentials. And I still have some business helping clients with their investments and taxes. And I'm invested in real estate pretty heavily too. So that's me. And Joe Cashman and I were personal friends, and he's the one who got me here.
And your city treasurer.
I'm city treasurer.
Joe Day, City Council. I'm serving my 2nd term now, and I'm an assistant land use manager with Newcastle County and kind of involved in the budget process there as well.
I'm Jonathan Justice. I have taught at the University of Delaware for my 23rd, starting my 23rd, and it's a long time, isn't it? And I have lived in Old Newcastle almost all of that time. I teach local government, budgeting, and financial management, and related topics.
I'm Laura Fontana. I moved to town in 2012 and got involved in a variety of different commissions. And I'm the treasurer for the Newcastle Historical Society. So I've been through several of their budgeting processes over the years. And I'm 28 years in the financial services industry.
Well, thank you all. So the first item is to discuss the House Bill 144, which gave us permission to have very.
City finances, just an overview.
Oh, sorry.
No problem.
Go ahead.
So I sent out a packet earlier this week, just to give you a robust background of the city, and Courtney's gonna go over our current accounts and where we stand. But I also included our latest audit report. Our next audit will begin in October, for last year. I included the detailed budget and the latest financial statement. So Courtney, if you just wanna get started, thank you.
So feel free to stop me if you have questions. The first report is our treasurer's report. This is done monthly. It reflects all of our bank accounts. Just to kind of go over our bank accounts, we break them out into 2 categories: unrestricted funds and restricted funds. Our unrestricted funds is pretty much to do our daily day-to-day needs. And the restricted funds is either due to something council put in place or like grants or stuff like that. So in our unrestricted funds, we have our play cash. each department has a certain amount to pay cash. That number pretty much doesn't change because we pretty much have that on hand by the end of the month. General fund is where we pay all of our bills and our accounts receivable, accounts payable, all go through general fund. Payroll, of course, is to pay our people. Money retention, it's kind of like the city savings account. So we house all the money there. However, a portion, we take money out of there to fund our general fund for accounts payable if we need to, and it is also to fund payroll, needs. I'm not sure if you guys heard, I know some of you have, the ARPA money is also sitting in this money market retention. So even though it says 7 million, it is a portion of it that is still restricted. And it was only restricted because council made it restricted. A municipal street aid, that is for funding we get grant for fixing our roads. Separation Day is a grant as well, that we apply for every year to help fund Separation Day. The savings and bond funds is from our bond bills that we receive, and that's where that sits. Sally, Edie, police grants, that is all of our police grants that we receive, and it goes into that account. Employee retention, that account is funded. You only see it being used. We fund it once a year, and that's in July, at the beginning of the budget. But it is to, basically if an employee leaves, if we have to pay them out for their vacation, sick, that's where we use that money there. So, since I've been here, we haven't touched it too much. It is like once a year, but it all depends on people leaving. Our capital reserves, that was funded.
2011, it was established and never, an initial 125,000 was put into it. And it wasn't kept up with over the years, so it's just been sitting there. So going forward, we would like to develop an actual plan for that and continue to grow that account to save up for large capital purchases.
And the two new ones that we just established this past July, was done through council at our fiscal year 26 budget, is our comprehensive plan and our special budget grant fund.
So the comprehensive plan fund, the idea with that was to add to it over the years between a comprehensive plan being adopted and when we need to update that comprehensive plan. So we'll update it or contribute to it over the next 5 years and have, $50,000 to update the new plan. And then the special projects and grants funds are for grant matches, special projects, things like that. And both of those were adopted via resolution. Just to add one more thing, in our July meeting, we adopted ordinance 553, which you have in front of you. And it sets up a budget stabilization fund and a capital improvement fund. The budget stabilization fund allocates $4 million out of the money market retention fund and creates a new account. So we're working with our bank to create a new account for that and then have that separate fund, and that will be our savings that will hopefully grow over time. And then section 3 will eventually establish a capital and infrastructure fund with a starting balance of 2 million. And that will be decided upon after the mid-year budget review sometime in January, February. So that is to come. It's not on this initial report, but I just wanted everyone to be aware of that.
I don't think we discussed, I remember the capital reserve fund being mentioned in the discussion around this ordinance, but I don't think we made a specific decision as to whether that 125 will be part of what goes into the capital and infrastructure fund.
Yeah.
But that's something when we make the decision in January or early February after
We can
the
talk
mid-cycle,
more.
we
Yeah.
can talk about that.
Exactly.
So the special projects and grants fund, the 35,000, is that separate from, I saw in the budget under mayor and council?
Mhm.
There's a line there for grants and things like that. Is this in addition to what's in there, or is it being moved to this?
So under Marion Council, was it the 999? So it's two different things. So we do a contribution. And that might have been what you've seen, which was like 99,000.
Uh-huh.
And then this 35,000 and as well as the comprehensive plan, the 10,000, I have to actually hit a line on the expense side, so it does reflect in our budget. But that's only because I have to show like the money moving from one account to the next, so that's the only.
The money you refer, that's grants that the city gives to
So
our nonprofits.
Right,
But
so,
more than half of that went to the fire company,
Right.
it's like 60,000.
mhm.
And then the remaining 39 was divided among the library, the senior center, the historical
Historical,
society,
Barrestaff.
community partnership, Barrestaff.
Under the budget on page 36, there's a special projects and grants line
Mhm.
of 35,000. So that's where we put it into the budget, and then at the start of the fiscal year, then we moved it to this account.
But that's like if we, like, for example, I think the Historic Area Commission applies for a grant every year. And
That's for the mayor and council contribution.
right, and that's what this, where it requires a match. And they use it for things like when they created that, I don't know if you've looked at on the city website, the guide
Mhm.
with all the examples of the different types of architecture and shingles. Well, obviously that thing didn't come together cheaply, and so they got a grant to fund putting that together, and that type, it's from the state, I think. And it always requires a match of $5,000 to $6,000. So that's something that could potentially come out of this 35,000. And then there are other grants that require
There's
matches.
the grants, you'll hear, we talk about them at every council meeting. A lot of them require matches, and sometimes I'll try to use other grants to match, provide matches for each other, but sometimes we just need to come up with our own match. So that should aid with building a fund to develop, get these matches from.
Thank you.
So with the stabilization, the 553, I have 2 copies of 553. Should I have 553 and something else, or?
No.
It doesn't matter, I got 2 copies, okay.
Yeah.
But so it's 4 million and it's coming out of the 7771. And you talked, so it's staying within your banking structure. Is that what you're doing with it? Like keeping it with your bank?
Yes, so I want to talk about our banking structure a little bit, if we're okay to move on from this report. For right now.
I'm sure.
Okay.
I think that's part of what we're looking to this committee to do.
Yes,
is advise,
What to do?
review what options are available, maybe make new suggestions for things we hadn't thought of,
Right.
and then help us decide what's the best way to preserve this money and hopefully earn a bit more interest, because it's not money we need imminently.
Exactly. So right now we bank with M&T, and we have, the money market retention, and we're working on creating this other account for this budget stabilization fund. That's just because this ordinance requires us to do so immediately upon adoption. But we have been, over the past year, we've been working to reach out to other banks, reach out to other investment companies, and see what options there are. We've reached out to PNC, and I would like them to come to the next finance meeting, and they're gonna talk about all of the options that they have. So we could do our daily banking with them, we can do our investments with them. And then when I was with the town of Townsend, we used a investment company called Creative Financial Solutions, and they helped us do something similar to this, where we had a good amount of savings. We took a good chunk, a couple $1 million, and put it with this investment company, and they really worked to target, the greatest growth potential for that account. So I'm gonna have them come to our next meeting and see if we are interested in moving to another bank and having that bank do everything for us, or maybe splitting it up and having the bank, do our daily banking, but also having another company to do our investment and things like that. So yes, right now everything is with M&T, but eventually I would like to expand to give us the greatest,
I
centralized
suspect
investment.
that that's the case, because it used to be Wilmington Trust,
Mhm.
and the city wanted to deal with the local bank, and now it's not a local bank.
Right, and we do get some funds from investment, but I believe we can probably earn a lot more by going with another account. So that'll be something to look at in the future.
So I think so right now you're getting 1.75% on the money.
But that's we only see interest on. So a lot of these accounts collect interest, but we're not actually allowed to take the interest. So when you see the interest hits, it's from our money market retention. That's where we get the big chunk of it from, and then our bond savings account, we're allowed to transfer the money. But yeah, it's 1 point.
You don't take the interest into the budget cycle, you reinvest it in the account.
No, so we do.
You're not, are you distributing it from the 7 million? Are you taking it?
No, it's in
Yeah,
there,
okay.
but it's available for us to use for whatever needs. Because in our actual budget, once we get to that part of it, it's an actual line for interest that
Yeah,
we're
there's
accounting for revenue to help fund the year.
So that is kind of what's to come and kind of where we stand. Do you have any questions from what we sent you? I know there's a lot of information. I know Lori asked for a statement of, what did you ask for? A statement of, financial standing.
Right.
And that was in the audit.
Yep.
We are financially sound as of now. We adopted our budget in June. So I included all that information, and there is a year-to-date report for July. The next year-to-date report will come out at our next meeting of council. And some other things that I'd like us to work on, for the next meeting, is I'm going to work on investment policy and a financial policy and, just kind of areas of opportunity that we have right now to kind of create a more robust financial process within our city. So that was that. We can move on to the next item if you're ready. There are no other questions.
Okay, so now we're gonna move on to the variable tax rates. At the point that we made that request through the state legislature, I think there were 2 or 3 other cities who currently were permitted to do that. Camden, Ellesmere, and I can't remember the third. Anyway, and the state legislature granted us permission, and the governor, after a month or so, signed it. And, but then now, as you probably know, all cities have been given this. I mean, when we started with this, my thinking was, you know, we're gonna have to make a decision, first of all, what categories are we going to use? And then how are we gonna divvy up the interest rates between them? And obviously, would have to look at the surrounding communities and the unincorporated areas of the county, because we don't want to price ourselves out of the market for businesses. But if we can, if we're a little bit over, they're probably not gonna move because of that, but we don't want to be out of line, way out of line. And now, of course, everybody's in a state of flux over this. I doubt that, I know the school districts are wrestling with it as well. And as far as I know, no cities have made any decisions about. They
No.
probably had already done, like us, passed their budgets by the end of June, so they're gonna be looking at it for next year, right?
Yeah, they're varying fiscal cycles that some of the municipalities are on. The feedback that I've heard from a couple of the municipalities so far, Dover apparently already had the authority to do so, and they didn't differentiate between residential or any other zoned area. And I heard back from a couple of Sussex County municipalities, and they just adopted their budget with the single rate at this point. I don't know. Did you know of anyone else who changed? No, so I don't believe anyone after the Senate bill was passed in August that went back and changed. And
Gave everybody. It doesn't mean they have to, it just gives
No,
them
just gives them
permission,
the authority, yeah.
So I know all the school districts have this.
right?
Mhm.
So, and there's different ways of dividing it up, and obviously, we're not gonna make any decisions this afternoon, we're just starting to talk about it.
Right.
And we have time to do it thoughtfully for next year's budget cycle. I mean, if we just do residential, commercial, I think the figures we had divided it residential, commercial, and industrial, I believe.
Mhm.
And the percent of residential went up as a percentage of the total tax revenue to the city. And the industrial went up as well, but the commercial went way down.
Right.
And so how are we gonna deal with that? And I guess I have a question, and other cities, older cities probably have this too, is a building, you may even know the answer, somebody might, Joe or Chris. If a building is commercial on the ground floor and residential above, as we have many buildings on Delaware Street with a restaurant or a shop or something on the ground floor, and either the owner lives above or they rent out apartments, but it's a combination, how is that building classified?
It's usually a mixed use building,
They
and
do.
it would probably be commercial.
It would be not, I think the county terms either residential or non-residential. They don't differentiate
Commercial and industrial.
commercial, industrial, it's just residential or non-residential. And that's what the school districts have done also.
Property class,
Property
as
class.
opposed to zone.
Right, because I was looking at zoning, thinking if we say included our downtown gateway and our historic commercial district with residential, that would avoid putting the extra burden, because those are mostly small businesses, as opposed to the businesses in our industrial parks that, those are either general commercial or commercial industrial office park zoning. It makes it more complicated, of course, to administer.
So we have to be careful, Mike, please chime in. When we break up, however, we're gonna decide to have the different rates. We would have to have like things have a like rate. So a residential type unit would have to have the same as any other residential. And then same for commercial. So if it's commercial, it doesn't matter if it's a large or small business, it would still be a commercial
You
classification.
can't split between
Yeah.
these.
Right.
And you have to be, so way that your charter change was adopted in the synopsis, it did call out that residential, commercial, industrial. So feel pretty confident that residential, commercial, industrial, you're good to go with those classifications. When you start to go beyond that, you're starting to insert legal questions. I'll just say in this open session that if you're going to go beyond that, we should take a look at that and analyze that, because there are guide rails and parameters to what you actually can do. But under your charter change, you're safe, residential, commercial, industrial.
Okay,
So we could have 3 different tax rates.
Correct.
Another way to look at this, just in preliminary research that we did, was town of Ellesmere has a really interesting way that they do it, and they have a rate per unit and then a percentage. So say there's an apartment building with 20 units, you charge $500 per unit plus a percentage, like 5%, 10%, whatever it is, on the entire building. So I think that's very interesting, and that's something we could also look at. We
so a
have to-
single family home would be 1 unit plus the percent,
Yes.
and a twin and so on and so forth. Even if they're owned separately, because twins sometimes or townhouses are owned by
No,
two-
no,
No, that would be
apartment.
two separate units,
Yes. Because they're split by parcel.
right?
Mhm.
Oh, okay, if they're separate parcels.
More like apartment buildings.
Yeah.
Yeah.
Apartment building or commercial building with multiple units.
This is a tax
Yes.
that Ellesmere does.
Mhm.
We don't have any condominiums.
I'm sorry.
We don't have any condominiums in town. so-
Condominium.
Yes, we do.
Yeah.
Yeah, we have some,
But those are recorded as separate parcels.
yeah, each condominium is up separately.
So I'm just throwing it out there, another option. But as we look at this, I can present to you some options that are already seen throughout the state. And if, we want to look at other states and see what their municipalities do, we can certainly do that. And any recommendations you have, we can certainly research.
I think Pennsylvania and New York also allow differential
Do that.
tax rates. And I know New York, I don't know about Pennsylvania. New York also allows, which I don't think we want to get into at all, but just for information, also allows differential assessment ratios for different classifications of property. So New York City uses widely varying effective tax rates for a lot of policy purposes. So the effective tax rate on multiple dwellings is effectively, well, I don't know what it is now. When I lived there 30 years ago, the effective tax rate on multiple dwellings was actually 10 times the effective tax rate on 1, 2, 3 family houses. That was a policy choice that the city made, and they did part of it with a different rate and part of it with a different assessment ratio. But they also had 5 or 6 categories of property classification. They also controlled their own assessment process, and they were able to split properties into portions according to use. So here, I don't think we want to get into that, but it
Sounds
is
like
an
we don't have that
example of
ability,
the
like
kinds
we-
of choices that places make and how they decide to allocate the tax burden.
And building off of that, and that's exactly right. So Newcastle, per your charter, you are linked to the county's assessment. So however the county assesses property is how you have to treat the assessments. And so that's that piece. Delaware Constitution requires that tax rates of similar properties be equal. And so then when you deal with taxes, the General Assembly has to authorize different tax. So that's what the charter and then recent Senate bill allows the municipalities to have different classifications or different taxes for classifications, but you have to marry those two provisions. So you have the Constitution and then that, and that's how you have similarly situated properties need to be classed the same. You can create separate classifications, but how far you take that is going to be viewed through that lens. So those are kind of the parameters impacting what you can do as you structure this.
You know, Jonathan, when you were talking about differential tax assessment ratios, if I recall from many years ago, when I worked in New York, the town would say your tax assessed value is 70% or 50% or whatever of the market value. Whereas here, it's the assessed value is the market value, right?
Under current law, yeah.
So we wouldn't be getting into that, the
Right.
ratio.
Right,
Okay, I just want to make sure I understood that correctly.
no, and I wouldn't
Well, we don't
think it
really
makes
know.
sense for us to get into that.
Yeah,
anyway.
right. I mean, we don't really know Tyler's right calculation because I don't think that truly our tax assessment is our current market value, but, and we don't, I mean, we can't, we're gonna go with what it is, but I don't think that it's exactly accurate.
I think one of the things I wanted to point it out that we had talked about earlier, so the big hit we took was actually in the industrial assessments. So the difference in the industrial assessments, it went down by 213,000. So commercial was 63, light commercial was 70, but the light industrial, the industrial was a big hit for us. And then, of course, residential went the other way.
I thought
when
like
it
when
was charged.
industrial went up.
Is that information in the?
No, I'm sorry, I didn't do that.
Our industrial assessment went down. So overall, the assessment went up, but it only went up 3 times.
Okay.
Whereas most of the properties went up 5 times.
Right.
So overall, we're collecting $213,000 less in taxes from our industrial properties this cycle.
Even with the tax increase, we're collecting less.
Yes.
That's a problem.
Yeah, well, you see how much of a hit it, I mean,
Yeah.
it is. The other, I mean, like I said, commercial was 63, which, I mean, it isn't crazy. And then light industrial, which is a separate category on here, was 70. But the regular industrial is really what set us
Okay,
back
so
for this
those two were
budget.
down, but how much did residential increase, the total revenue from residential?
The total revenue from residential increased 356,000. So it went from a share of 40% of the 83 numbers
That's
to
what I'm looking for.
52%.
Do we have a way to make copies?
On the card.
Yeah.
I don't
Yeah,
know, I didn't know if I brought this, to be honest with you, or if it was on the table.
No, you're
I
on.
got all my papers out, and I put them on the table, so.
Thank you. So it went from residential went from 40% to 52 in it.
Yep.
52. And what did commercial do?
And commercial went from 10% to 8%,
And then what about industrial?
27% to 20%.
And I think that's, to me, that's what, we have to look at that percentage
Right.
and try to get back to that percentage. I mean,
Right.
we gotta look
Yeah.
at what that does, but right now, we know that their taxes, even with the increase, they're paying less. And that's not right.
That
when-
doesn't make sense. right?
Which is what I think that's what the school districts did. They looked at what percentage it was previously, then they adjusted their rates when they had the ability to do that to equalize the percentage of where it's coming from.
So if for next year, if we prepare the budget, we need X dollars to meet the budget. Then instead of just picking a single tax rate, we
We're gonna have
three tax rates to come up with the same total amount of money.
Right.
Right.
And the school districts did just keep it to two, commercial and residential. And I looked at their numbers to try and figure out if there was like rhyme or reason, but they're all over the place.
Yeah, they are
All
all
of them
over.
are way different from, I mean, some of them are close, but there's no, you know what I mean?
But they also had referendums
Yeah,
included in the increases.
Right.
That's what Colonial had, right? So they had the referendum and they went up 9%. So like, they had a lot in their package.
And every school district will have a different mix.
Right.
yeah.
Sure.
So in the industrial, commercial, residential, do we have the, like, how are they 1, 2, and 3? Is it the most residential, then it's commercial, then it's industrial? Like, what are the,
Of gross revenue?
or number of, I'm just curious, number of units, like, do we have most residential? Or is it commercial or industrial? Like, what?
So residential is, and this is just by parcel number, there's 2,418 residential parcels. And then the next one is there's 97 commercial parcels. 68 mixed use. 36 open space and recreation. 34 industrial. And then 21 light industrial.
But we can't differentiate those, so those will just all be
Yeah,
industrial,
that'd be
right?
just-
And open space and rec is probably never taxed because it's
Right,
owned
right.
by the city or the state or the county or whatever.
Yeah.
And we have sort of an added complication in that the trust owns a fair amount of commercial property, which they rent. And so any decision we make about tax rates on commercial property is going to impact them. And that's something that other communities don't have to deal with, but I think we at least need to think about it. I'm not saying we need to necessarily make a special exception for them, but we at least need to consider it. Because if they have less money, then they can't do some of the things they do for the community.
Thank you.
Well, I would think that most of their leases are triple net leases, that's the tenant pays the taxes, not the trustees.
Okay, is that what, I mean, I knew that was the case with the farmer's market. I did not know that was standard.
I think that's probably pretty standard unless,
Commercial,
yeah, for commercial, unless it's maybe a smaller commercial where the owner may pay the taxes, but they're gonna pass that along in the rental.
in the rent, sure.
I
Either
think
way.
we can look at their individual parcels and see what they're paying in taxes now versus what they did. And then see where if we change it, where we take it to.
But we might be skating on thin ice if we distinguish between like property uses based on who owns them.
Right,
Oh,
we
yeah.
can't do that.
Can't do
Yeah.
that. Yeah, I knew we couldn't do that, say, well, if the trust owns it, you're gonna trust tax it less, but just that we need to consider that
Sure.
impact when we're making our decisions, that's all.
Yeah, there's a lot to think about as we make this decision, you know, we don't wanna price businesses out and make them not wanna do business here. We wanna keep it livable for our residents and for raise and things like that, so there's a lot of different factors that are put into this, but at the same time, understand that the city needs to bring in the revenue to balance, but
So I know you're part of the City Managers Association and so forth. Have you had conversations with your colleagues about what the various cities are doing? Because I mean, everybody's gonna be thinking the same thing. We don't wanna price ourselves out of the
Right.
market. And so,
yeah, so they're all, for those who don't already do this, they're looking to do that for their next budget, and so I said, you know, we've been exchanging emails and we're gonna keep in touch as we all go along the process. But they all are trying to do what we're doing and start early and talk about this and think through this very thoughtfully and considerately, considering, you know, everyone's.
right, so nobody's gonna make a decision in the next month or two.
No, I don't believe anyone, just as I, shared with probably some of you individually, it would, first of all, we had to adopt our budget by July and send out the bills, so it's really too late in our situation, but for others and also for us, it would be too costly to rebudget and reassess a tax rate and then send out new bills and then just too confusing for the residents, so.
So what have you been hearing from the residents as they drop off their tax bills at City Hall?
Some people are understanding, you know, it's the first time we've raised taxes in 16 years, so some people are thankfully understanding, but there are some people who are very concerned and upset, and a lot of the concern has to do with the assessment. So again, as we have to adopt the county assessment, we're referring them to the county, making sure that they're informed of who they need to speak to, and we just had someone come in right before I came over and who said, I never even got my new assessed value from the county, and I said, well, if you really didn't, you never got a letter, then you need to call them and you need to report that. So I think just we're trying to educate them of how the process worked and be as transparent as possible with that and let them know that the assessment has changed for the first time in many years. The tax rate has changed for the first time in many years. So people are understanding, but there are of course people who are not happy with it, understandably, we understand, but the reality is we haven't raised taxes in 16 years and we've had a lot of increases to our expenses in that time. So.
I think one of the big issues that we see too is that it seems like a lot of the lowest valued houses have went up the most. And we all know like the floor of real estate is increased so dramatically that it's probably right. But at the same point, you know what I mean? It's like you're punishing people that probably could least afford it.
Right.
Mhm.
Yeah, and I've been wondering if some of those properties were underassessed in 1983 through whatever mechanism, because of what neighborhood they were in, because of whatever.
I just think the floor of the market right now is so high. You can't buy a new house for
Right.
under $250,000 and, you know what I mean? It's went up so dramatically that I think that, I think the assessment numbers say that. I don't think it's right that, you know what I mean? But I shouldn't say that. I don't think it's great that we're taxing them more like that, but I do think it kind of reflects the market.
It does, definitely
I mean-
reflects the market.
Okay.
And you're right that a lot of those lower priced houses have gone up dramatically in assessments compared to some of the higher priced houses. So, yeah, the burden is falling more on the lower priced houses. And I think Tyler Technologies, I mean, if you look in the historic district at the assessments, they're all over the place.
Mhm.
They make no sense whatsoever. But
Yeah.
that's beyond our controls.
And we had said it before. I mean, if you're under assessed, nobody's gonna appeal that.
Right.
I mean,
Yeah.
like, yeah.
Please.
Yeah.
Although there were some cases where people did appeal, and Tyler, when people would appeal, Tyler would look at the whole area. And there were situations where people appealed and they sent out new notices to the whole neighborhood at a higher value. So it wasn't just that they could go down, they raised assessments for some people too.
Aren't there like 5,000 appeals outstanding?
Mhm.
Like,
That was a couple months ago.
Yeah.
I'm sure it's way more.
right,
No,
Well, they
did.
stopped taking.
Yeah,
that
the
was
deadline
yeah,
was
deadline, yeah.
the end of March, I think, was the
Yeah.
deadline, so
Yep.
that's.
Now they're gonna start appealing for next year, but they're still training the referees now.
Referees, yeah.
We see them in the conference rooms training them all now. So, but they did send out a schedule this week of when they start, when the actual hearings start. But to be honest with you, I didn't really look at a whole lot.
so just out of curiosity, with the appeals, I'm just curious, so we sent out the bills based on the value that the county has now, right?
Right.
So they'll just get credits if there's a change, I'm assuming, is that how you'll just credit it for their
So their
next year?
value in July is what we built
Yeah.
upon. So that will be the rate for this year. So that change won't occur till next July. So if there's a new rate at next July, then we will bill at that new rate. But we,
I think the
I
question
know.
is the appeals.
Do they have
Yeah.
a credit?
If they
So
win their
if
appeal.
they win the appeal, we will continue to keep the July 26th rate. We won't give them a credit because we built them at that rate, at that time.
And if
But then
they
when-
overpaid, you're not gonna make any adjustments for this year if they overpaid.
No, because we had to accept the July 26th.
I don't think we can do that though.
I don't-
If they win the appeal, we gotta roll it back, we gotta
Right,
send them an
I don't-
adjusted bill.
Yeah.
And then either have and this is just me talking out of what I think I know. And we either gotta give them a credit or a refund. I don't think if they win the appeal that we can say too bad.
Correct. Now, I don't know if it has to be, and I think in this, I think this is gospel. I think part of one of the multiple bills dealt with refunds and credits and authorizing that piece on, so you have to do something. I don't know if it means it has to be a credit and kind of where that shakes out. But from the city's standpoint, the budget process assumed and took into account a certain amount at risk.
Right.
And then the question is, when you have those final numbers, how that impacts your budget season going forward, I think is how it works. But I can look into, is it a credit, is it a refund? I don't think it's a refund, but I can.
I think it would be a credit just
Yeah.
on your account for your
Well,
taxes bill for next year.
Is it the school or the county tax that says if the refund, if you overpay more than $50, you can request, you may request a refund.
Correct. But and that doesn't, and that's my point, that doesn't apply to the city, which is why I think you are a credit situation, but I don't know.
But it's not that they don't get any credit for the lower
That's correct.
assessed value.
That's correct.
Now, if they're, from what you're saying, the appeal could result in their assessment being raised.
I don't know about in the appeal process, but during the preliminary appeals
first
that Tyler
reviews.
was still in, then they raise people. I don't know whether county can do that now or not, because Tyler's out of it, it's just the county.
So they're, okay, there'll be a whole different it'll be actual county employees doing the appeals,
Oh, yeah.
Yeah,
not Tyler people.
Right.
And that's probably governed by state law too. So states vary in whether appeals can go either way or whether it's risk-free for the.
Yeah, and that's actually, I think, one of the reasons and one of the benefits of being tied to the county system is because if you did your own assessments, it is regulated in terms of what that process is. You have to have a certain appeal process. You have to follow all of those rules. And the city doesn't have to have that in place because you defer to the county. But you're correct, the county, they're the system of rules and parameters.
and we did get the number of appeals in the city, right? Did we have that number?
Yeah, I think it was 41 or 50.
I wanted to say it was around 40 is what I thought it was. So it's not an astronomical number, and we certainly know that it's not any of the larger properties. 'Cause
Ours
most of
was
them
a lot
took
of
decrease.
It was more the commercial properties.
Yeah, that's what I was wondering, commercial.
Yeah, it was like, if I remember correctly, a handful of residential.
Mhm.
Ours was
Oh,
mainly
okay.
our commercials that was appealing. They
I
said it
think the
was
farmer's
less.
market, I think he said he was appealing all of
I
it.
do too. Yeah.
Yeah,
I did
appealing
say that.
all of
I
them,
did
yeah.
say
That was
yeah.
Yeah. And I know even just like emails and stuff, me and Diane got of people who are paying their taxes like, oh, what is the process once it's appealed? It's mainly the commercial properties.
And that's where we lose. And so when we went down to the General Assembly and testified about the variable rate.
Yeah.
So even, no matter, even if you take the industrial properties as an example, so we only have 34 industrial properties. But if they underassess even 5 of them, it's a huge hit on the city budget.
Right.
So they're gonna go make a case that the commercial, you know what I mean, whatever, we'll say farmer's market is being assessed too much. But we don't have a seat at the table saying, no, you know what I mean? Is the county gonna testify? Yeah, would they testify the same amount, like, and put in the same effort that we would? I mean, I don't really know. It doesn't affect the county budget nearly as it affects our budget because it's so much smaller, you know what I
It's
mean?
a
So,
much smaller proportion
Yeah.
for them, yeah.
yeah.
Is the farmer's market an industrial or a commercial?
No, it's a commercial.
Commercial, okay,
Commercial.
yeah, so industrial is just like the down the street. Across the
Like Twin
street, whatever, yeah,
Spans and
Twin
Center
Spans, yeah,
Point,
yeah,
and
okay.
I'm sure there's other ones too.
Right.
The ones out on Lucan Drive, some of those are.
Yeah.
But
industrial.
some of them was appealing as well. Some of the commercial.
I think people are going to feel it when they, get their escrow statement for their
Yeah.
mortgages in November, like, that's when
Yeah,
I
yeah,
think it's all gonna hit.
Yeah.
My my company, mortgage company sent me, and they've never sent this to me before. They sent me a note and said, your city tax, we paid this much more in your city taxes, and they've never sent me anything when
get
they
ready for it.
paid it before. So I guess they're just preparing me for like that escrow portion, but I think people are gonna feel it when they get their escrow statement.
Because they're gonna feel it because it's actually gonna be double.
Correct.
Because the
They gotta
mortgage
pay it
company
back, they
paid
gotta
money
pay
out
it
of their
back.
pocket
Right.
to pay, which now you have to make up.
Right.
Plus they have to get enough
Mortgage.
money for next year.
Right. We're
So
all
if
in.
they had to pay $1,200, your mortgage payment's gonna go up by $200 a month.
So you're either gonna send them a check for this year's
Right.
payment, or you gotta add it in plus the additional, right?
Right.
So that's really when people are gonna feel it, I think, is when
The
those.
ones who have
extra-
mortgages,
The
yeah.
ones that have mortgages, and they
Like
just
all-
don't know yet. It's
It's
coming.
like all three of these things hit at once though, too, with the reassessment, all the school districts raising, of
Yeah.
course, we raised our rates.
Uh-huh.
I mean, certainly not ideal timing,
No.
but
What's, just out of curiosity, what's like our bad debt rate? Like, how many people, well, if you have a mortgage, it gets paid, but for people who pay directly, I mean, do people just not pay their taxes? Is there,
Yeah,
like, what percent of them just?
like
Bad
10%.
I don't know
Less than
that
10%,
10%, but
It's
we'll,
not a large
we
portion.
go after you. So
Ah,
either you
I
could
know.
pay your taxes or you could pay our legal fees
Right,
and
okay.
your taxes and the late fees.
Delinquency rates are usually much less than 5% of property taxes. If it approaches 10%, you've got a real catastrophe. So Irvington, New Jersey is about 8%. That's because they're just completely multi-income fiscally. I think most, we don't do a comprehensive report, but the jurisdictions in Delaware that do comprehensive, and we should, it's too expensive, but the jurisdictions in Delaware that do comprehensive reports, the current year delinquency is usually around 1 to 2%. And the delinquency over multiple years, allowing for retroactive collections, is usually less than 1%.
So what do you think we should do with this going forward? I mean, we've kind of laid out all the issues. There's so many unknowns at this point. Sit tight till the next meeting and see how things are shaking down. If the appeals start to be decided, what other cities are doing.
Mhm.
Yeah,
Yeah, I think for the
if are there issues we need to do research on,
Yeah, I think for the next meeting regarding, the taxes, I can share what other municipalities do and things like that, but if you wanna do your own independent research in the meantime, you're certainly welcome to do that. And then you can share with me and I can disseminate to the group before the meeting. And then I'll also set up those presentations with,
PNC.
PNC and Third Financial.
So has PNC already given you a proposal of any sort?
Yes, yeah, and I'll share that in a bit.
And have you talked to anybody else or just PNC?
We talked to PNC, we talked to M&T, who we currently bank with, to see if there are, greater opportunities for it. But it seemed like PNC would be the best option. I mean, we could share, they never got, final proposal from M&T. But just in talking to them, it just seemed like PNC had greater opportunities. all
Who
around.
do the trustees use? I know they were with PNC.
I think they do have some of their accounts still with PNC. I mean, the Historical Society does use a money manager,
Mhm.
Bruton Financial, and I think they do a fantastic job for this Historical Society, and then the investments are through Fidelity. They do all the trading platform through Fidelity.
Who did you say the money manager was through?
Bruton Financial, BRUTON Financial. Jamie Bruton. I mean, I can get you in touch with them, but,
Yeah, please.
they, that's who they use, but they clear through Fidelity.
And I mean, Wilmington Trust still exists as a money manager, right? Have we talked to them?
Yeah, when they came, it was an M&T rep, but he spoke on it. And just, I guess like we have a secure account if something is to happen, like it will back what the city has. I don't know, like if the market crashes or something like that, because our amount is over the FBA limit. And they want us to move it to Wilmington Trust, but that doesn't really make sense because in my opinion. I don't know why we would move our backup money to the same if it's affiliated. Cause if you go down, is the backup gonna go, you know what I mean? I don't,
I don't
I just
know
don't
how they're
think
still
that's-
affiliated, I have no idea, but M&T and Wilmington Trust,
Yeah,
Wealth
was-
Advisors or whatever they're called.
he
these
was,
days.
he worked at M&T and he was speaking on Wilmington.
Oh, okay, so they are still related.
I'm
Well,
just-
yeah, we have to be sure that it's even, I mean, we may be taking a lower interest rate to have it fully insured, because yes, our amounts are above the FDIC limits. But
Oh, I'm sorry, I was
That's-
actually gonna ask if I could just ask a couple questions, and that was one question I didn't realize I had until just now. So this nearly 8 million is, it's in a bank account. So that there's no repurchase agreement backing it or
What you mean repurchasing?
anything. So now this I haven't taught in 25 years, so my knowledge is out of date. What we learned 30 years ago was that the way to deal with insurance limits was, there are a lot of ways, but one standard way is a repurchase agreement. And the bank, when it takes your deposit over the insurance limit, provides collateral back to you in the form of treasury bills, notes, or bonds, depending on the appropriate maturity. And then you release the bonds back to them. They repurchase the bonds from you when you withdraw your bonds.
I don't know if it works that way, cause this was set up before my timing. However, our money is back.
Okay, so
I
we
get
have
that.
some kind
I
of.
get a statement
Yeah.
that I have to keep, well, it's secure, not just physically, but electronically,
So-
that if something is to happen, we're supposed to go take this statement and,
Okay, so we
We'll
do
be
have
fine.
some kind of access.
yes.
And the other question I had, because the reserve fund ordinance calls for incremental funding of the reserve fund, so we're not gonna roll any of this $8 million of unassigned cash into the reserve fund upfront. We're just gonna fund it incrementally over
For the budget
however many
stabilization,
years, yeah.
well, the initial allocation will be 4 million.
Okay, so there is.
Initially,
Mhm.
and then for the capital infrastructure, it will be 2 million initially, but that's to be decided at the new-year budget review.
well, and part of that, I mean, the ARPA money that's in there is approximately 1.2 million. And council had concluded that we wanted to use that only for capital projects, not just nickel and dime it to death in general expenses.
Right.
So perhaps that money would go into the capital improvement fund because that would match the intention that we established. But again, that has to be finalized. Next
And then
year.
that's very predictable, so you can match the maturities of the investments to when you're going to get money very easily.
Yeah, I would just say that, and I spoke with Anthony and Abba as well, whatever we move into there, we have to make sure that we're careful, because that money of the 8 million, we also use for general needs. So paying our bills and funding payroll. Most of our income, our revenue is coming right now.
Right.
So if we put too much in there and then January comes, I can't transfer money to pay payroll, we kind of have an issue.
Well, that's why we decided to split.
Yeah,
I think the original proposal was to move all the money to both funds immediately. And that wouldn't have left enough in the account to be the backstop you need for general fund expenses. And that's why we decided to split the two. So I think we're finished number 2 and we're on to number 3, sort of.
Yeah, I mean, we did kind of already talk about it, so I don't know if you have any further questions about it right now. Until we look at the different proposals.
I mean, when you're thinking about, have we done any like budget forecasting, like just kind of like what, or any type
So
of,
that's what I'll be working on this year.
okay, any type of plan, like what are our needs in 3,
Yeah.
5, 10
Mhm.
years?
So
you
that,
know, like,
that's
we
something that I'll be
need to know
working
that.
on. Like capital improvement plan
Correct,
and
right,
all of that and.
But that hasn't been done up until now.
right,
So, I
right.
mean, but it is something that she's talked about, we've talked about on council, trying to get ahead of some of this stuff.
Right, well, one big thing it's not next, it's a next year, with fiscal 26, next spring, we have the ASME negotiations,
Yes.
right?
Yes.
So for fiscal 27, we're gonna probably be paying higher salaries, just like this year, we did the FOP negotiations, so
Right.
the police budget went up because their salaries went up.
Correct.
And we're losing 2 police officers, this week or next week, one by to retirement and one to another jurisdiction. So we just brought on
We
one
gained
new
one.
person,
Yeah.
but the year before we brought on a new person, but now we're losing 2. And there's several of our long-term officers that are
Getting close.
coming close to retirement within the next, say, 2 to 5 years. So all of that fund that we use when people retire, and if we have to pay out their sick and vacation pay, may get some action.
Yeah. And then we also last year reduced the contribution to that fund, so we may have to consider adding more to it in the future.
Yeah, it used to be 50,000 a year, and then we started doing 25.
Because we hadn't been using it.
Right.
So does the
So-
police department do like some type of future forecasting, like?
Yeah, so that's what the contract negotiations will tell us. So we've done it for at least that portion of that budget, of the police budget. So.
But I mean, like who's retiring, how much is it gonna cost to get, like, do they have all that? Like, are they planning that out?
Yeah, but some things are,
You can't really determine.
Well, you can,
The retirements, you can semi-predict, the
Right.
people who get another job.
no, that I understand, but I mean, right, I mean, they need to have some type of capital plan
Yes.
too, so they know
definitely.
what's
Human
happening.
capital.
Yeah,
Mhm.
And that's what 62% of our budget is police department, something like that.
right.
It's the biggest,
It's the
it's,
largest.
Typical.
It's-
Yeah.
well, sure.
I think both of them combined is more like 62%, right? Public Works and police combined.
I think
come
it's
to like around
salary.
62%. Yeah.
Yeah.
And I think if my numbers were correct, the police budget has increased by like 60 to 70% in the last 5 years.
Yeah, this last contract was.
The last contract was a big jump.
Significant.
And how often do they do contract negotiations?
Every 3 to 4 years.
But
So this one was significant because all the larger agencies raised their floor and were giving sign-on bonuses. So in order to
Yeah.
retain who we had to at least come up and be close to competitive. We're
Right.
still nowhere near like the floor of the state or county police, but we're much closer,
right,
so.
You need to keep competitive to the other agencies.
Yeah.
So in order to attract and retain, you have to.
mm,
right. It's been hard to,
Yeah.
it's been hard to recruit
Right.
officers for years, and now it's particularly since
And it's a
COVID.
statewide issue, it's not
Right,
just
right.
here.
Yeah.
So that's somewhat predictable. We know what their raises are, because they get a raise in each year of the contract. And then once we do the ASME contract, we'll have that projection, which is Public Works primarily. I mean, there's not that many people in the office that are in ASME, so.
And that's next year, you said that
Yeah.
negotiation.
To take effect July of. So it takes effect in fiscal 27.
And what about MSC? They pay $600 and something thousand a year. Is that like set for a set period of time and renegotiated, or how does that work?
It's not, I think we at one point maybe briefly talked about talking to MSC, about maybe raising their contribution to the city.
I thought their contribution though was based on a percentage.
It's
I did, based on,
Yeah.
it's in their charter.
Alright.
It's in their charter, right?
One of ours, yeah. So that's something we could potentially look at, but again, you don't want to
Oh, right. sure.
impact their billing too
That
much.
would just mean they'd have to raise the rates.
Yeah, yeah.
I mean, we have what, the lowest or second lowest electric rates in the state. So,
So MSC is a percent of their revenue, like you
Yes.
said, hey, okay.
And I think somewhere this year we were like at $800,000 range, right? For MSC? I think that's what it was.
And then, the only other thing I remember, what, the trustees, right, they're paying you to pay.
The trustees is the
225.
wash.
Right,
Mhm.
so it comes to you, but you're paying the.
the
So
loan,
we pay the loan
Yeah.
first and then we get reimbursed.
But because we can get the loan at a lower rate, the city can get the loan at a lower rate than the nonprofit could, so that's why this is handled that way.
The MSC appropriation this year was about 750,000.
And by the charter, it has to be 6%. 6% of their previous fiscal year's audited annual user charges.
Yeah.
And interestingly, this I didn't know. If it dips below 500,000, it's subject to renegotiation.
And we budgeted 808,000 this year for MSC appropriation.
So it's six, so you negotiated 6%, that's some negotiation took
Can
place.
the MSC negotiate to supply all the power to the new data bank? And then you won't have any, 6% of everything.
But it does,
Can we annex that?
Yeah.
It's in the county, right?
yeah, it's in the county. Yeah, because I was gonna say, in terms of our industrial rates, tax rates, if we lose some of those businesses, it's not just the tax to the city. MSC, they're the biggest customers, and because they're buying more power, that brings down unit charge and that lowers all of our rates. And so losing industry is not just the tax, it's gonna impact our utility bills.
And then the impact to jobs and other things.
Sure, all those things, so.
Well, and that might be another question, I have no idea how we would answer it. In terms of choice, whether those tenants or property owners would be more sensitive to a tax rate increase or to an electric and water rate increase. Because if you could figure out that they'd be less allergic to one of those, that might be a choice for shift the burden to.
The challenge, it's an oddity in Delaware. So there are two municipalities in Delaware that are subject to this structure. It's Newcastle and the city of Lewis. They're the only two where their utilities are controlled separately. So the rates being set by MSC and whatnot are separate. So all other municipalities, the city council can have that conversation and that determination. In Lewis and Newcastle, that determination happens separate from the city in terms of where.
Except the new board composition for
The mayor is one of the three commissioners, so that's the link, but not the,
Right.
not a majority vote, so. Yeah, I just remember reading Newark was gonna raise some of its revenue by bumping up their power rates.
Yeah, so I mean, it's pretty common, and actually, that's one of the, I represent Lewis BPW, so I'm very familiar with the difference, but one of the arguments is having that separate, has rate discussions not blend into general fund discussions, because it's pretty common for municipalities to try to pick which bucket they're.
Especially Newark, because half of their property is tax exempt.
Right, well, now they have this new
That's
per
the
student
university.
fee, so we'll
Yep.
see how that shakes down.
Well, that'll just get passed right through.
Oh, sure, into the tuition, but it still could bring revenue into the city.
Any other questions or topics you want to touch on in the next meeting that I should add to the agenda?
Besides the PNC presentation.
And
Are we, I'm sorry, are we talking about meeting like monthly or
So
bi-weekly or?
we're required to meet quarterly, but I think this year with a lot of topics and things to discuss, we should probably meet at least monthly,
Mhm.
or bi-monthly at the least. So if you wanna, I mean, I'll reach out with some dates, but if that's too much for you, in terms of meeting time, and we can reduce that.
Well, every 6 weeks, maybe roughly.
Sure.
See what the needs are.
Right, right.
And maybe keep, just update a discussion of variable tax rates or something, just because if it's not on the agenda, we're not allowed to
Right.
talk about it.
Mhm.
So, because there may be more information from other municipalities or more from how the county's handling the appeals. There's lots of stuff that, we're getting new information about that regularly. So I think we want to keep it on the agenda, even if it's like 5-minute update and we're done, it's there if
there.
we need it.
Yeah, absolutely.
What other bit of information that might be useful if it's possible, and it wouldn't need to be precise, but just in general terms, is sort of what the known or contingent uses of the cash available to be invested are, so that in terms of, are there things that you know you're going to need in 6 months, or that you'll need once or twice or 3 times every year? The budget stabilization fund, that's kind of challenging because it's a big lump of money that you may never need, but you also might need it with fairly short notice, so it has to be something that you can liquidate without taking a huge loss, without having a lot of advanced warning. But then some parts of it are gonna be very predictable, so you can say, you know, we can, this needs to become liquid in 6 months, this could be for 12 months or 24. Especially once we have a multi-year capital improvement plan, then you can really map it out. Some things will be 1 year, 2, 3, 5, 6.
Right.
Yeah, I think the plan is going to dictate the investment strategy in,
Right.
Definitely.
you know.
And I'm old enough to remember Orange County, which was, it was a lot of things, but it was also just a liquidity issue.
And can you keep us up to date on the decisions from the appeals? At least that affect the county or affect the city? It'd be nice to kind of know, I mean, where we stand and are we gonna take a huge hit, or are we not, or?
Yeah,
Keep
once
the
they
support.
start having those hearings and making decisions.
And then we're finding out what the process is if they do win in their favor and the tax assessment
Mhm.
changes, what
Yeah.
is what's our commitment? What do we have to?
Well, yeah, do we have to give them their money back if they want it?
So does the county have a plan in place to notify you when parcels in the city change?
Yeah, so the normal process is every quarter we get an update on, what's the word?
Yeah, but they stopped doing this, so I don't know.
Yeah, so I don't know if
They're
they're
gonna
gonna,
resume it or not.
yeah, but I would hope with the appeal process, they're gonna.
They stopped once they started doing, I think, like March, I think of last year. They stopped doing it. We used to get a quarterly report to give us updates and like of the assessed values.
Right. Because I know they just completely stopped
Yeah.
doing
Yeah,
visits while the reassessment was going on.
yeah, so
but
I don't
hopefully they're
know
gonna
if
start
that's
again.
gonna resume. But if not, I hope they will send it for us. How we got it in the first place was an email, so I hope they will at least send us. Like,
I would
But we
think
could
that we
also-
have to resume it, not just
Yes.
for us, but for all municipalities. I mean, for the city of Wilmington and everybody.
So I think all those houses that built in River Bend, they haven't been assessed yet. Because I looked at one yesterday that was, I think they settled in 2024 sometime, and it just still
Yeah.
just has the land assessment.
Because they stopped at some point in 23.
Yeah. So that should be, once they do start again, then we'll be able to tax those people.
Yeah.
Can we tax them for the back years?
It just goes from the moment we get it for the rest of the year.
Right, yeah.
But I did see some for Riverbend that go this tax season that was just still the land value. Yeah,
Mhm.
and we had a couple people that called that they have a house there, but it's still land value. So I don't know what the method was.
So the budget for this year, there was no allocation for taking money out of the reserve in this year's
Correct.
budget, correct?
Correct, because we did that, we've done that for the past few years, and then last year we had to take 1.25 and change, so, couldn't keep doing that.
I think council figured, we thought we were getting to the critical point where, you know, it was interfering with our safety net and.
Right.
We decided not to do that.
Because what is it, 6 months in reserve
Yeah.
At least.
is minimal.
Mm.
And, yeah, we're over that, but if we'd have kept taking at that rate, we wouldn't have been.
And then also in your package, you have what we present to council during budget season, the whole 5-year comparison. And then you'll see it shows up on the revenue side under restricted and unrestricted. You'll see that on the year-to-date report, which is a monthly report council gets. You'll see it just says 0, which if you look at the budgeted one, you'll see last year was like 1.2. I think the year before was like 400,000. So you'll see it like.
Well, I'll send out dates possible dates for the next meeting. But in the meantime, if you have any thoughts or, read through the binder that I sent you, if you have questions, please reach out and, we'll address that. Thank you.
No, thank you.
Yeah. Motion to adjourn,
So moved.
second. All in favor?
Aye.
All right, thank you all so much for your
Thank
time.
you.